The salams that we continue to receive on our social media platforms. That's at K24 TV, Instagram, Facebook, as well as X. You do know we've got a brand new WhatsApp number scrolling at the bottom of your screen. Karibu sana if you wish to contribute. We've got a great one for you. In fact, I've been loving our lineup this week. Amazing discussions back to back. And this time around, we're talking to you about money matters. Apologies as I'm coming down with a cold. Everyone in the office is literally avoiding me, but this is exactly what we do every single day. We give you great conversations that, by the way, are provocative and also get you thinking about what to do next. And so it's really about personal development, if you think about it. And so are we done? Is my crew okay? She's on TV today. All right, let's talk to you about your credit score, ladies and gentlemen. Very many of us, myself included, have probably tried to access a credit product for one reason or the other. In fact, you know, we talk about tough economic times, and the number of people who practically function every day on credit is astonishing. So the question here is, why is it so important to have a good credit score? What are lenders out there actually looking for? And most importantly, how can you build your way up so that when you seek that particular product, when you walk into a facility or you decide to get into a mobile app, you are, or at least your account is going to be looking a-okay. So we've got the expert in studio. We are teaming up with Njogu Credit this morning. In fact, Grace Njogu is here with us this morning. Grace, welcome sana to the show. We're happy to have you.
Asante sana, karibu.
What is your position at Njogu?
My name is Grace Njogu. I am the Chief Commercial Officer at Njogu Credit.
Okay.
Essentially, I'm responsible for revenue, how much money the company makes.
Yeah.
So the customers that we onboard, who now would be of good credit worthiness.
Yes.
Those are my customers, and that's my key responsibility.
Oh, wow, it's a tough one, huh?
Yeah, it is. It is.
All right, so I think we're in good hands. But you know, just like I always say as we start the show, we like to give it a bit of context. And so when we hear that term credit score, what is the best way that you would describe it, Grace?
So typically in Kenya, credit score is a 3-digit rating that is given to a person who has either previously borrowed, there is a negative listing and a positive listing. It is between 250 being worst credit score, and 900. So 900 is a good credit score rating. So that's what we define a credit score rating as in Kenya, for example.
So when you think about why we do all of this, there has to be a reason. What reason is it that you actually need to have a good credit score and literally just being able to access credit? Why is it extremely important?
First, I think for young people who are joining the job market, it allows you to do things that you would not be able to do if you are saving. So there are opportunities that are not going to wait for you to be able to save.
Right.
With a good credit score rating, you typically get favorable interest with financial institutions because you are a person who can be trusted to be able to take credit.
Yeah.
And you're responsible in making sure that you're making payments in a timely fashion. So you could be making payments, but they're late. And then now there's making payments in a timely fashion. You have not defaulted on previous loans. And so when there are opportunities, and I'll give an example, right now there is this government, they're called cheap housing, the government affordable housing. So the current rate is going to be preferable for people with a better credit score rating. So you will find some people will afford 9.5%, others will be at 12, 15. So the better your credit score, the better opportunities it allows you to access immediately. Because obviously saving would be ideal, but how many people have the patience to save, to acquire assets, to be able to capture opportunities? We don't know whether after this government has run its course, whether these affordable housings will be there. So if you are saving and they are not available anymore.
Yeah, what next?
What next?
Right,
yeah.
right. I think also, let's start off with the point of fatigue, Grace. There are very many people who've just felt like, okay, I'm in a rat race, and to be honest, whatever, you know, come by and buy. Those are the people for, you know, if we die, we die. and it's just up in the wind, not bothered because, you know, whatever. So what really, you know, kills people's motivation towards trying to at least, you know, keep up with their outlook, trying to be better, trying to improve? Why do we give up easily?
Okay. So the first reason you'd give up on paying a loan is when you took the money and you did not invest in anything of value. So for example, you took out a loan of 500,000, you were paying a debt.
Yeah.
So you were actually borrowing Peter to pay Paul. And the loan you have taken out is for 60 months. Remember, you've done with Peter, you are now dealing
Stuck.
with Paul,
Yeah.
and you did not get any value. In your mind, you did not get any value. So if you do not get any value, you will of course get payment fatigue.
Yeah.
Option 2 is that you actually bought a depreciating asset. So you've borrowed the money to buy an asset that's now becoming a liability. For example, you bought an expensive German car. After buying it, now there's a maintenance.
Right. And
Yes.
we have a lot of those cases. Huh?
Yes, now you're maintaining, and maybe you were upgrading from a Vitz.
Yeah.
You are here struggling with let's even say a Peugeot.
Yeah.
Now, if you borrowed for a depreciating asset and the maintenance of this asset is more expensive than the installment you're paying, you will discover you decide to let the asset go,
Yeah.
or alternatively just abandon paying that loan, because when you are assessing the value you got from this credit, you cannot see it.
Yeah.
So a lot of the debt payment fatigue is because you did not get value. You were not able to plan in advance what was this asset, the loan for.
Right.
And if indeed you knew what the loan was for, it has stopped being valuable.
Right.
Number 2 is where the financial institutions does not match when you're required to pay and when your income falls due. I'll give an example. You own a school. People pay fees at the beginning of the year. Maybe you receive income thrice in a year because there are 3 terms.
Yeah.
So you receive income at the beginning of the term. The second month and the third month inside the term, you're not receiving any income. Now, if anyone has given you a loan where they're requiring you to pay and you're not receiving income, you will of course get debt fatigue, because it is strenuous to think about where to get this money.
Right, to
when
pay
you
on time.
Yes, because
Yeah.
it's not matched to your income inflows. So that's the responsibility of the lender, to make sure that if I am giving out the loan, I am matching the repayment installments with when this person is expected to receive their income.
Right.
That way you can be able to allow this person to pay. Number 3 is when the installment is consuming more than 60% of the income that this person makes net.
Okay.
So you have gotten somebody who's maybe employed in a nice institution, they may be getting 100,000. When you look at 35% of that, so they're taking home around 65, 70,000, and the installment is 50,000.
Wow.
So the person is required to not only pay the installment and live.
Yeah.
So if they were living in a rental house of 30,000, now that they've taken credit, it does not mean that the rent now has dropped to 25,000.
Correct.
So if, for example, they were taking children to school, the school fees will fall due, and yet they have an installment to pay.
Right.
So it's also the creditors here now, lenders like myself, our business is making sure that we are giving this person a debt that they can be able to manage, that we are alive to the fact that this person will live even after they've borrowed our money, and that we have only consuming a reasonable amount to allow them to sustain their lifestyle and to pay our credit.
Right.
So those are the 3 reasons I've seen typically that lead to debt fatigue, because somebody decides, you know what, the loan is not that important. My children have to go to school.
Right.
I have to live I cannot live outside on the trees like birds. I have to pay rent. So
Great.
my credit is going to, now the lender, ajipange. Alikuwa shajua I earn 100,000.
Yeah.
What was he thinking?
Right.
Giving me this money.
Kwani, see, they have insurance.
Yeah,
But
wajipange.
you know, I've picked up 3, actually, let me say 2 things from what you've just said.
Yeah.
Number 1 is the culture of borrowing and bad borrowing. So the issue of good debt versus bad debt comes up.
Yes.
Okay. And then number 2 is this fear that we have about approaching your lender. You know, there are some institutions that talk about, you know, we are here to walk the journey with you, we are your friend, we are what, but we typically don't look at you guys as lenders as people who care about our interests. There's this fear that I cannot come back to you, Grace, and restructure my loan, so that we are working with something that's logical, we are realistic about this debt that I've taken. So number one, let's just talk about that. I mean, what people just borrowing aimlessly, like you didn't think through why you needed that 100K. Yeah.
So the first thing I think we as lenders need to keep talking to our customers about is that indeed you had taken out a loan with a certain installment. Should things change, there are debt, they will almost call them debt collection products. So there are restructures, there is, for example, restructures, we can even decide to waive some interest and penalties if you can be able to demonstrate that indeed there was a circumstance that changed and affected your income. So for example, you are employed, you are no longer employed. Typically what I see with banks is that during the period where you are not employed, they can almost freeze the installments as they wait for you to be able to be back on your feet. But you, as the person who's borrowing, you need to be able to talk to your lender.
Communicate.
Not when the lender is coming to knock and ask, Allah, where is our money?
That's when you want to talk.
That is typically not a good lender-borrower relationship. Lenders, the burden is on us to be able to make sure that we have relationship officers who are checking on our customers typically from time to time. Not only when we want somebody to reborrow. So that the onus is on us, but also the borrower. Should things change, for example, if your business is not doing as well as it was doing, maybe you've been affected by floods, and now what you were expecting as a source of income is no more. You should not wait until the bank is finding out during the debt collection process that indeed your circumstance has changed. If you're able to visit the bank and say, look, this is what we were expecting to generate, this is a source of income, it's normal. What other products are we be able to? And you know, sometimes even, I'll give an example with our lenders. If our products are expensive and we notice that you are struggling, we find even buy-off solutions for customers. We get them somewhere where the lending rate is a bit more comfortable, the term is longer, to allow you to get back on your feet. So if you are the one to first raise your hand and say, it's not working, the bank and the financial institutions typically are willing to meet you on the way. Yes.
Please throw in your questions if you do have any to Grace this morning. She's here to talk to you about how to go about, you know, your credit score and why it's important, even about the relationship that you're establishing, FYI, with that financial institution, not specifically Ngao Credit, obviously, but if it is, good for you. But how can we improve the way we actually relate with these people who are lending us money? It's interesting that she has talked about how we tend to just disappear, go MIA until it's crunch time. What do we need to do to ensure that, by the way, things are running smoothly? So yet again, just to remind you, our WhatsApp number is brand new. There you have it at, at least at the bottom of your screen. It's scrolling. Also talk to us through our social media platforms. We'll be happy to sample your text messages in the second half of the show. But let me just ask Grace at this particular time to give us secrets of the trade. And really, for those of us who are not in this sector, we don't really understand what you're looking for. That makes me either qualified, not qualified, or just pending. Because there are those files that just sit on your desk.
It's true.
And you're sitting and wondering, does Wajiko qualify? I don't know. Let's get back to her in September. You know? So tell us what essentially as lenders you look for.
So we first are going to look at how have you paid other loans. So typically you'll find that they'll pull your credit score from some of these credit reference bureaus. I think in Kenya we now have Metropole or TransUnion. And this is where they list all the good loans, that's the performing loans and the non-performing loans. When we're looking at those loans, we're going to be looking at how many loans have you borrowed and what is their repayment cycle. So have you taken an installment loan or a revolving loan? So a revolving loan is like an overdraft. You borrow to pay, you pay to borrow. And I think I also have seen these mobile loans. The banks almost give them as an installment loan. A loan which is an equivalent of your 1 month salary. So that's once you pay, you can be able to reborrow the full amount. So we are looking at the type of credit that you've taken out, how you've repaid previous credit, and then how frequently have you requested for, we actually call it a hard inquiry. How many times has a lender pulled your credit score trying to decide whether you are the right person to lend to.
Wow.
Because the frequency of that CRB report being pulled will tell me if you're in distress. If I also notice that you're taking a lot of this revolving credit, borrowing here to pay there, also that tells me that you're in distress and you might not be a good candidate for borrowing. I also am going to be looking at the installment vis-a-vis your income.
Right.
If you have borrowed from, say, Stanbic, then you borrow from Ngao, then you borrow from Branch, then you borrow from Tala. Those are some of the red flags that somebody is struggling when I'm looking at the total installment you pay vis-a-vis the total income you generate.
Right.
And I can see the total credit is more than the total income in, then that could also be a red flag. So my recommendation is that if you are taking out a loan, pay the loan.
Yeah.
It is 50% of the credit score is determined by how well have you paid previous loans. So number 2, you should take a loan.
Yeah, okay.
Because if you don't take a loan, I do not have your credit history. As a lender, I don't know whether you are good for borrowing and paying back, or you are not. So contrary to popular belief that you should not take credit, lenders don't lend to people without a credit history.
Oh, wow.
They don't.
So people who are just there, me, I don't like loans, I don't borrow.
We do not
Shoko
know.
you. When you
Yes.
actually need it, you'll be like, who are you?
Yes, customer behavior. We cannot be able to see demonstrated customer behavior that
Right.
indeed you can borrow and pay. So we are looking for people who've borrowed and paid, people who are paying the installment on time, the people who are living within their means. I think so. You're not living on credit. Yeah, you have a fantastic lifestyle, but it's being supported by credit. So we're also looking for such things, and of course the hard inquiries. Who's inquiring for that you're looking for loan? Are you looking for Tala, Zenka?
Yeah.
And when were you looking for this money? If it's very close to when you're trying to borrow from me, I am under the impression something is not right.
There's something up.
Something is not right.
Right.
And typically lenders want to make sure that we are giving to people who can pay back. Yeah. So you could find that you are not able to lend to you.
Yeah.
Because you look like you are currently not doing too well. So we are also keen that we are lending to people with capacity to pay back. That's called responsible lending.
Wow, it just sounds like you have such a tough job. Like I wouldn't even know what to do if I was in your situation. But because I believe in the 2 minutes, maybe you could give us a bit of background on how you're able to pick up on deception, because this is typically what you're trying to decide. Who's trying to deceive the financial institution versus who's being a genuine borrower?
So typically most financial institutions will be looking for your past statements, where, for example, how much has been coming in. Yeah. And we can tell when somebody is trying to game the system, meaning that the money is moving from account A to M-Pesa to account B. You're trying to build a statement. We can quickly pick it up. Yeah. Because we also want to see when the money is in your account, how slowly does it trickle out. Right. If, for example, you get a deposit of 1 million and shortly after 800,000 is out. Yeah. Or 100,000 and it's being withdrawn to your mobile number and then it's being deposited through your mobile number. You're typically trying to game the system and we'll pick it up. And then we're also going to be looking at customer behavior. I think now we have a lot of tools to be able to see where do you fuel. Yeah. For example, and I can be able to tell which car you drive because of how much, where you fuel, the frequency, the transaction amount, just from your M-Pesa statements. Right. There's a lot of tools now that can be able to tell me if you're living way beyond your means, where do you shop. Okay. It will tell me what's your lifestyle. Right. And then also, what do you pay? What do you pay for? Are you paying school fees? Where do you pay school fees? So I can also tell where you live. Yeah. Can tell what do you consume on an average in terms of your expenses. And then when I'm now looking at your bank statements and seeing the frequency of inflows, I'm able to assess, am I within the 2/3 rule, the 1/3 rule? And those are typically some of the things the financial is trying to see. Am I overlending? Right. Yes. Sometimes we also are going to look at in where there's asset-based lending, I'm going to be looking at the collateral vis-a-vis the person who is using this collateral to borrow. For example, if there's somebody who's coming with a V8, and they are 20 years old. Yeah. When I look at their financial statements, there's no known source of income. You just get lump sum. Yeah, so we don't want people who are fluking it because lending and most of our loans are going to go 2 years, 3 years, some go even to 60 months. Yeah. You can't be having windfalls every 60 months. So yeah, so those are some of things. Yeah.
Interesting, isn't it? We want to take a short commercial break. Grace is in the house with Njogu Credit, just giving us a couple of tips, by the way, when it comes to how you're managing your money, how you're borrowing. We're talking about improving your credit score, ladies and gentlemen. And by the way, if this relates to you, we want you to throw in your questions to Grace this morning. We'll see you in just a second. Of course, if we do get those text messages, we'll be sampling them in just a few. welcome back to the show. It's all about money matters on this Wednesday morning. We're telling you how to go about your money. And of course, if you tend to want to just pinch at that particular loan, you want to take out a facility with a particular institution, we're letting you know how to go about it and why, by the way, it's so important for you to keep up with a good credit score, because it really does determine what you can access in future. We have the pleasure of having Grace Njogu here with us from Njogu Credit. She's giving us some great tips this morning. Grace, welcome back to the show. We managed to tease our topic as we always do on socials. We want to thank, by the way, the team for putting this together, our show assistant, Charlene in particular. Brenda, Madam Happiness, is our director this morning. Let's take a look at what Kenyans are saying or asking Grace, and then hopefully you can be able to respond to them. This one's in from Mitch, says, how can professional finance advice contribute to improving a credit score? That's good. I like that, because financial literacy is another monster in itself, and I think even just the access to it seems to be a challenge for so many people. All of us, in fact, is something that we can learn. So yeah, I mean, that's a good question. How even you as Njogu contributing to promoting financial literacy?
I think one of the ways we are contributing to financial literacy is that you'll find on our social pages, specifically LinkedIn, and some short skits we're doing on YouTube. We are talking about how people are getting into bad debt, and we're also telling you how not to do those things to get into bad debt. So we are making sure that we are generating content that's infotaining. That's we are informing you that it's important to go through the T's and C's of the loan contract that you're going to sign, to make sure that you understand the interest, the fees, and the installments required to pay, so that you only get into what you are clear about. Number two, it's very important to know how they go about their debt recovery, what alternatives they give you in the event that you are in distress. And all this is found in the fine print. So one of the videos you'll find on our YouTube pages is we are demonstrating skits, just showing you that you need to actually make sure that you are getting yourself informed, not after you've borrowed and things have gone wrong, but as you are taking out the loan. But additionally, we are participating in these conversations here and in other TV stations, where we want to be a thought leader in the space, not only to ask people to borrow, but to be responsible borrowers.
Responsible borrowers, that's the key word.
Yes, responsible borrowers. So that we agree debt is good. It can be able to allow you to leverage opportunities you ordinarily would not be able to. But there, as the question that the viewer has asked is, what financial advice should you seek? What are you borrowing for?
Remember, we talked about that. What's the purpose?
What's the purpose? So that will always
Your
be
why.
The why. Why are you borrowing? And I will even I'll say here that there are different lenders for different kinds of financial needs. So educating yourself as to which lender is good for what, then that's always a good idea. Number two, start with saving. You need to be able to, in Kenya, I think the culture is borrowing without saving. I'd advise a lot of people is start with the culture of saving, so that every time you're borrowing, you are complementing what you already have. So that you're not borrowing and you are going to have a new financial obligation, and you are going to, the entire financial obligation will be a loan. So typically I'd like a good balance of savings and borrowings to be able to allow you to leverage opportunities. But also ask your financial advisors about debt consolidation. I have a debt with I&M, I have another debt with Mwananchi, I have another debt with Njogu, I have a debt. So can you be able to consolidate these loans so that you have a single installment that falls due on a single day, so that you are not under distress? Because can you imagine you've borrowed from 3 financial institutions, different times of the month. One comes end month, one at the beginning of the month, one at the middle of the month. You're constantly servicing debts. You will surely get stuck up at some point, because some obligations are going to fall through, and indeed you will be in a very bad situation with debt collection officers from those financial institutions. So my recommendation strongly is, if you're going to talk to your financial advisor, agree, is this purpose for borrowing for this financial institution, this type? Then there are circles, there are banks, there are microfinance institutions, there are digital lenders. Which borrowing from which financial institutions? Understand the T's and C's, and also if where you have more than one debt, consolidate. Yes.
I like it. I like it. Next one, Brenda. Also, congratulations, you're a YouTube star. Sebastian, good morning. Is it better to pay off credit card debt in full each month or keep a small balance? Okay. I don't know. What, what do you think?
So a credit card debt is what we're saying an overdraft, a revolving.
Right.
It could get you stuck in debt because it has an interest component. Every time you pay with an interest component, which means if you had a credit debt of 50,000, when you're paying 55.
Okay.
You reborrow. So you are constantly digging yourself into debt. My advice, and I don't know whether this is the typical advice, credit card debt is not for everyone. It is for people whose there is a reason for borrowing, an urgent reason. So they should take care of emergencies, things we cannot foresee.
Right.
And not for survival. Yeah, so every time when a revolving debt is for survival, it does not get you out of debt. It sinks you deeper in debt. How to get out of credit debt is to pay slowly. Don't pay once, because immediately you pay, for example, you earn 100, you pay a debt of 50. You are now at less 50,000, so it's very hard for you to survive. You'll be forced to borrow again.
Right.
Yeah, I typically would recommend that you pay 10 and then 10 and 10 as you're leaving the credit card debt. But I don't encourage them. As where I stand, I don't think they are advisable for consuming. They are not debt for consuming. They are for emergencies, and we need to think about them like that.
Right, for a rainy day. All right, let's take a look at our third one, and then we can get back in the conversation. We have a Max here, Grace, who says young people are always borrowing on mobile apps. What advice can you give us on how to be a good candidate? I'm assuming for more borrowing.
Okay.
Yeah.
So first, I like the availability of credit on digital apps. I really like it. It's quite advanced. I think Kenya, because of our mobile money situation, we have more credit lenders in Kenya than any other part of Africa. And maybe Nigeria would be second there.
Okay, but that says a lot about us.
Yes. And the conversation, I think, before the current bill, the Data Protection Act, was around distress following a lot of mobile debt, when they were calling your relatives, your colleagues, your employer, and they were causing you a lot of stress and panic. What is my advice? You need to pay all the debts you borrow to be able to qualify for more debt. The challenge with this, the digital lenders, is that typically they are very expensive. 20%, 15%, and it's not sustainable to constantly borrow and pay,
Yeah.
You will develop debt fatigue because one time you'll have exhausted the credit limit.
Yes.
Where you, for example, pay 50,000 and they cannot lend you 50,000. They'll say that 20,000 was interest, 30,000 was the principal. Anytime when you get into a situation where you have paid money and you cannot be able to reborrow the same amount of money, you develop debt fatigue. So my advice is pay off the debt and don't borrow unless you need it. Unfortunately, I think this advice will fall on deaf ears.
Yes, because there's someone who's borrowing right now because Arsenal or whoever, I don't know, let me ask Sarah about football.
Yeah.
Like whoever is playing this week will have to be borrowing in order to bet.
Yeah.
You know, that's the thing. I think the trick here is the easier it is to get, the higher the price you pay. So there's a lot of risk associated with mobile app borrowing. You know?
Yes. And there is a lot of risk because these people already have a lot of data about how you get your finances. So most of the credit decisioning being made on digital apps is very informed.
Yeah.
And because it's very informed, unfortunately, it can lead you into a debt hole.
Yeah.
So a lot of wokeness or savviness needs to be given to our youth, especially those one in university, people who are just out of school, as to why borrow. The culture of also living above our means could be a problem because we need to generate income so that we can be able to borrow.
Correct.
So borrowing is not a source of income because it has an interest component, which is an expense.
It is.
Yes. So we need to educate our young people that borrowing is not a source of income. Betting. The house always wins. In fact, this is a joke.
It is.
The house always wins. So
it
doesn't matter how long you've been winning. A time will come and you will lose.
Right.
So I think the education is not being done at the right level. I think, I don't know, universities, when we were going there, I think there were not a lot of mobile apps.
Yes, for sure.
Of course. And the disadvantage also in borrowing a lot of digital loans is that they collect a lot of your data using your mobile phone. Now, this is not good. You should not have a situation where a lender has too much information about you because sometimes the advertising is borderline on exploiting, data exploitation. So for us, I think for the government is regulation, making sure that the data that the digital lenders are allowed to maintain is reasonable, not too much data, because in as much the data is good for product development, it's bad that somebody should have too much of your data, especially because I think you consent to too many terms and conditions without reading the fine print. So the government, I think, is where they need to now regulate these digital lenders and say, okay, this is the amount of data you need to maintain.
Yeah. We have about 6, I think, or 7 minutes or so. Brenda also tells me by then the season is off. So finally, like, we're free from this. There's no football until when? Until August. Oh, God. There is a God. Anyway, I'm going to be killed by football fanatics right now, but honestly speaking, I'm kind of happy about that. Let's get back into now this huge issue. You know, very many Kenyans kept talking about CRB, you know, mentioning just loosely talking about the Credit Reference Bureau, but not necessarily understanding its role and what it does. So here you are, you're a hopper. Okay, you want to move from Gao, you want to move to another institution, you want to try and get from Tala, like though you're talking about maybe you're trying to access, you know, loans or facilities from different institutions. But then here comes this monster called CRB that's standing in the way. So break it down to us about what the Credit Reference Bureau is all about, how it works, how it has changed the landscape of borrowing and lending.
Okay. So first and foremost, the Credit Reference Bureau is a concept that is not only here, it's world over.
Yeah.
This is where all financial institutions are going to be able to process your data and list people who've borrowed with the Credit Reference Bureau. It allows other lenders to be able to check the credit history of the person that is a prospective borrower for them. So for the financial institutions, it is fantastic. The sharing of data across financial institutions allows them to be able to make very good decisions as to who to lend to, who not to lend to. The flip side for us as borrowers, because you and I, not only as a chief commercial officer, I also borrow. As a borrower, it allows, we need to be very disciplined, especially with our financial obligations. And the aliveness that every financial lender, especially those that are regulated by the central bank, have been given permission to list your credit history with the Credit Reference Bureaus. So if you borrow, for example, from, I think, a lender like Ngao, which is regulated by the Central Bank of Kenya, they are required by law to list your credit history with the Credit Reference Bureaus. It allows that if somebody is going to give you a loan from I&M, from somewhere else, for them to be able to check your credit reference, see how well you're scoring, and to be able to decide what amount to give you and at what interest rates. So for Credit Reference Bureau, it's not a bad thing, because if you're a good borrower, a responsible borrower, the same is captured in the Credit Reference Bureau, which means that now, unlike Kitambo, where I think it was 2021, where there was a freeze of listing because of the COVID times, now there is no freeze. Means that if you borrow, you must have a plan to pay. So this financial advice we are offering, and I think other financial experts are going to be offering us to how do you manage debt, how do you borrow for income generating activities, and how do you match your borrowing to when the payments are expected. Now is more important now when there's a lot more data sharing than before.
Here's a good question. How does your credit score affect other areas of your life? I think we also just have a very tunnel vision towards the aspect of borrowing and think, okay, fine, maybe it's just Ngao Credit who will ban me. But then when you start chomoing your statements everywhere you go, then you come and start realizing, hey, you mean this thing actually matters. So yeah, tell us a little bit about that.
I was seeing something online about people who had won green cards. So when you're applying for your visas, I think many of us have been applying for our visas, you are required to submit financial statements. They will also do a background check on your credit referencing with the Credit Reference Bureaus. So those are some of the things. If you are trying to get a visa to go maybe to relocate to another country, they will be checking your credit history. They are not trying to take people who are not paying debts to their country so they can default loans from those countries. That's number one. Number two, a lot of people who are seeking jobs now, especially white-collar jobs, we will be pulling your Credit Reference Bureaus, and I'll speak about many people who are, many organizations are going to be pulling your Credit Reference Bureau. how well you are able to pay your loans is a demonstration of how responsible you are.
Wow.
And now we are talking about other areas of your life, how well you manage finances. So typically, these people, if you want to work in a good organization and if you want to work maybe in a good NGO, they will want to see your credit score, and it will decide that you are the right person for the job or you're not the right person for the job. And I think for a lot of us who are young people and we are being enticed by the digital lenders, I think it's long-sighted vision is that, am I going to be able to pay this loan?
Right.
What are the consequences of me taking a loan of 10,000, not paying? I'm now listed. And now when I'm going to get a job where I can afford to pay this 10,000, but I have to jump through hoops. Because once your record is with CRB, it will take time for it to be withdrawn until you clear your loan. And typically, the record stays for almost 5 years, performing loans performing with default history. You can see the credit reference has many things. They're performing, non-performing loans, performing loans with default history. And they all affect your score. I told you the score is between 250 being the bad score and 900 being a good score. So you could be currently paying loans, but you have a history in the past of having not paid loans. So it will catch up with you. So my advice to young people is take out loans, true, but pay them. There is no escape. And as the world is becoming digital, a lot more information is being shared. In a few years, there will be nowhere to hide. If you take a hustler fund, you take a Tala, you take a loan from a microfinance, these people will be all able to share this information. I think South Africa is a good example of where people can even give you a lot of money without you having any security, because the data sharing is a lot. So it's an advantage that we allow our many institutions to share data. Because now the credit decisioning moves away from what asset can you give me. It goes to this person has a very good credit history. And so with or without an asset, we can be able to advance them this amount of money.
Fantastic. I think I want to give you the opportunity, Grace, to let our viewers know, should they want consultation or they want to reach out more, because, you know, they also probably want to access, you know, your resource hub for all this financial literacy. How can they get in touch? Where can they get this information? And then we can say, go ahead, Rick, time is up.
So first and foremost, as Chief Commercial Officer Njogu Credit, a lot of the material on our platform, that's YouTube, Instagram, LinkedIn, Facebook, a lot of this material is for entertainment and education, especially about how people get into bad debt, how to get out of bad debt. Additionally, you can be able to leave your contact on our platforms, so that we can be able to walk you through the journey of getting out of debt. Most of our loans are asset-based loans. We are now almost launching a new product, where we're going to be lending without assets. We're going to be lending to employed persons. We'll be using Credit Reference Bureau. It's the topic for today. We're going to be launching our payday loans soon. And when we're going to be using the Credit Reference Bureau, we'll now afford loans to people who do not typically have assets like motor vehicles. So karibuni Njogu, it's njogcredit.com. It's Njogu Credit on our TikTok, our Facebook, our YouTube channels, and you'll get a lot of assistance. If you go to the website and you want to just make an inquiry, there's someone on standby just to be able to make sure they give you the best advice in a timely fashion.
Wow, thank you so much. What an excellent speaker. I have enjoyed having Grace. You have to come back on the show. I have, honestly, I've loved you. Grace Njogu, ladies and gentlemen, there from Njogu Credit, talking to us about money matters and how to improve our credit score. That brings us to the end. We hope, by the way, you have been challenged. For those of you who thought you were going to Atlanta, Georgia, with HE, Apana, look at your credit score, how to pay a visa. There's some good tips for you, like she has mentioned online. Please take advantage. It's absolutely free. If you would like to comment, if you'd like to rewatch this, you're going to catch it on YouTube as well. But let me leave it there and welcome you to our social hour tomorrow at 8 a.m. It's going to be fantastic. Shiko Kaitani wishing you a great day up ahead. Interactive is up next. Bye-bye.